I hand over the session to Vishalji and his thought-provoking session on 18.4 and 18.6.
Vishalji, over to you.
Sir, thank you, Arupji, and thank you, Arpitji. We'll just continue the session with 18.4 and 18.6. Sir, are we able to see the session? See the slides?
Yes, Vishalji, yes.
Yes. So 18.4 is opposite of 18.1. Opposite of 18.1, wherein a particular registered person who is into regular scheme, who he wants to shift the his particular tax regime from regular to composition. He wants to opt for section 10. So the opting can be done only in the month before starting of the financial year, that is in the month of March. He has to opt that for the next year he wants to do under composition scheme. So once he opts into composition scheme or paying tax in the composition scheme, whatever is the goods which is held with him, the stock which is held with him, the stock can be either the trading goods or the raw materials or semi-finished goods or finished goods. So on all these particular inputs which he has already availed, and also the ITC on the inputs on the capital goods which is already been availed, that particular input has to be reversed on the date when the composition is being applied for. So let us suppose we are applying a composition on 1st of April of 2024. Then as on 31st March 2024, whatever closing stock I have and the capital goods, whichever is available with me, on that stock and capital goods, I have to reverse the ITC. Input service is not being covered. It is only input goods and input on capital goods. And after reversing such amount, if there is any credit still pending, like let us suppose I have a electronic credit liability, electronic credit ledger balance of 1 lakh rupees, and if I have reversal calculation of 80,000. So if there is any input which is left after the reversal also, that particular input will be lapsed. So in our example, 1 lakh minus 80,000, the 20,000 credit will be lapsed. You cannot go for claiming refund of that 20,000. So this is section 18.4. This is also applicable in case where a particular commodity is being shifted from taxable to exempted. So 18.1 covers exempted to taxable. 18.4 covers taxable to exempted. So if there is any notification by way of which taxable goods become exempted, then ITC which is availed on that particular taxable commodity also has to be reversed on the date when the notification is there, wherein it says from taxable to exempted. We'll just proceed further. So this is the screenshot of section 18.4 only. So it covers stock, semi-finished goods, finished goods, and capital goods. And for capital goods, again, we have to calculate based on 5% per quarter of the useful life. And balance useful life credit only has to be reversed. I have a particular case also. We can discuss that. And if there is any balance available after the reversal, it will get lapsed. So we'll go into the rule 44, which talks about section 18.4. In this particular rule, it says that if there is any input, further, I just want to distinguish one thing. In 18.1, the time limit for claiming ITC is also there. You should file within 30 days. And then the input should be for the period 1 year before the date of conversion. But in this particular rule 44, there is no such scenario. So whatever is the stock as on the date of composition, for the whole stock, whatever is the ITC, that ITC has to be reversed. There are a few things which I want to highlight in this. Let us suppose there are few stocks for which readily invoices are available. Then on that invoice, how much is the credit availed? That amount of availment has to be reversed. Let us suppose there are few stock on which the tax invoice is not available, or you are not able to exactly match on which particular invoice the particular credit is being availed. Then you have to reverse the credit based on the prevailing market rate. And this particular market rate, which has been determined by the taxpayer, has to be certified by a chartered accountant or a cost accountant. So a certificate has to be issued. And for the purpose of capital goods, it is the remaining useful life which is left. So total useful life is 60 months. So let us suppose 24 months has already been elapsed. That is 2 years. Then on the balance 3 years, the ITC has to be reversed. So this is reversal on inputs, semi-finished goods, finished goods, and capital goods. For this, the form is ITC 03. So ITC 03 has to be filed when there is a shift from regular to composition or either taxable to exempted. And if you are cancelling the registration, this rule 44 is also applicable for section 29 subsection 5. So if you are cancelling the registration and on the date of cancellation, if you have any stock in hand on that day, then in GSTR 10, this particular reversal calculation has to be mentioned or has to be filled in. This is the rule 44. Now we'll just go into one case study so that then we can deliberate on issues. So a trader is switching from regular to composition dealer on 1/4/2024, the recent date. On the date of switching, the dealer had a stock of 3.5 lakhs valued at cost. 3.5 lakhs is the cost and 18% is the GST. Also, the trader had purchased capital goods on 1/10/17 and 1/10/23. So for 50,000 and 1 lakh respectively, this is also 18% GST product. So the closing ITC in the electronic credit ledger is 20,000 under CGST and 50,000 under SGST. So the first query is whether ITC reversal has to be calculated in total or it has to be calculated headwise. So the rule says that it has to be calculated headwise, CGST reversal, SGST reversal, IGST, UTGST. Everything has to be calculated individually. And based on that, if you are liable to pay, then you have to pay more. Or if you are having any balance in the electronic credit ledger, then that credit ledger will be lapsed. So in this particular scenario, what is the amount of reversal? So first case, in the case of 3.5 lakhs, let us suppose the 3.5 lakhs is purchased on account of a tax invoice which is readily available. Then on 3.5 lakhs into 18%, which comes to around, we'll have 9% and 9% so that it's easy for us, which comes to around 31,500 CGST, 31,500 SGST. And in case of capital goods, which is purchased in 2017 and 2023, for 2017, the useful life of 60 months is already been completed or elapsed in 2022 itself. So therefore, there is no reversal for the 50,000 capital goods which is purchased. But for the purpose of 1 lakh capital goods which is purchased in October 2023, 6 months is only been used. Therefore, 4.5 years is still pending. So on 1 lakh, 18,000 is the total credit. On 18,000 into 4.5 divided by 5. That is the amount which we have to reverse. Nothing but around 48 plus 6, 54 months reversal has to be done. So into 54 divided by 60. So that comes to 16,200. 16,200 divided by 2. So 8,100 will be the GST portion on the capital goods and 31,500 will be the GST portion on the goods. So total reversal is 39,600 in this particular scenario. So this 39,600 will be used. The 20,000 of CGST will be used to set off 39,600 and the balance 19,600 has to be paid by way of a cash under CGST. In case of a SGST, we have 50,000 balance. Therefore, in this 50,000, 39,600 will be used for SGST and balance 10,400 is lapsed. So actual impact for this particular trader is 39,600 into 2 plus 10,400. So actual impact for this particular trader is 89,600, 70,000 by way of credit and 19,600 by way of a cash. I hope so this particular case is clear. Shall we proceed further?
Yes, Vishal, and somebody has some question.
1 second. I need to,
Yeah, I think we can move ahead, yeah.
Is it exactly the opposite or change between 1 and 4? Sir, opposite in the sense 18.1 talks about composition to regular or exempted to taxable, and this 18.4 talks about taxable to exempted regular to composition. That is the meaning of opposite which I meant. For
So,
the purpose of reversal
sir,
calculation,
the
it
question
still
was-
says- Yes, sir. Hello. Venu, sir, you are saying something? Hello.
Till then, I think, yeah, Venuji is there. Actually, Venuji is in a low network area. I think there is some
Okay,
issue.
no problem, no problem. We have another question.
So, ma'am, I have
GST
some
on 1
question.
lakh is 18,000. How we are getting 39,000 for reversal? Madam, see, first is 3.5 lakhs is the stock, which is held as on the date of shifting from regular to composition. So on 3.5 lakhs, 9% CGST is 31,500, 9% SGST 31,500. So 31,500 is the amount of reversal we have to do. And on this 1 lakh, 18,000 is the GST is total. 9% is CGST is 9,000 rupees. On this 9,000, already 6 months is used. So what I will do is 9,000 into 54 divided by 60, because 6 months is already used. So 8,100 is only the calculation for reversal. So 31,500 plus 8,100. 31,500 plus 8,100. That comes to 39,600. I hope so. I'm clear. Yeah. Okay. So now we will have some complication in this. Now let us suppose this particular dealer has purchased goods from unregistered dealer also. So this 3.5 lakh stock is having few stocks are from unregistered dealer, few are from registered dealer, let us suppose. Then how the reversal will be calculated? Whether still on 3,50,000 full 18% will be applicable? Anyone who is having any view? Hope so my query is clear. So in this particular case, let us suppose the purchase of 3.5 lakhs. In this 3.5 lakhs, 1.5 lakhs is from unregistered dealer and 2 lakhs is from registered dealer. This is the known fact. Let us suppose we have a fact where it is unknown that how much is registered and how much is unregistered. So how the reversal will be calculated? Whether still the reversal will be applicable on the full 3.5 lakhs. Anyone? Yes. अरूप जी आपको बताना पड़ेगा लग रहा है.
नहीं, बताना नहीं. I was giving my view. I think because we are not sure as to how much we have purchased on purchased and unregistered. So reversal can be done on 3.5.
Okay. But if we know that 1.5 lakhs is purchased from unregistered dealer and 2 lakhs is purchased from registered dealer. In this case, I will just bring to your notice, section 18.4 talks with where any input is availed, on stock and capital goods. Further, Rule 44 also talks with where the amount of input tax credit relating to inputs held in stock. The amount of input tax credit relating to inputs held in stock. In this particular case, when I purchased the goods from unregistered dealer, I have not availed any ITC. Therefore, the stock which is available with me, it doesn't have any inputs which is available with me. Therefore, if I am purchasing from an unregistered dealer, I have not availed any input tax credit. Therefore, there will not be any reversal. This is my interpretation. Section 18.4 read with Rule 44, 18.4 sub Rule 1 and 44 Rule 44 sub Rule 1. This particular says that where input is availed. Yes, sir. FIFO method can be applied for in case where we don't know whether the goods are from unregistered or registered or which bill is there. So let us suppose we are purchasing from 4 or 5 suppliers also, and if there are closing stock is, let us suppose 100 pieces. On 100 pieces, we have to go only on FIFO method. That is for sure. But if I am able to exactly identify that this particular motor is purchased from unregistered dealer, this particular another motor or another pump is being purchased from a registered dealer, then that bifurcation can be placed in, and based on that a reversal can be calculated. So reversal will come only for the purchases made from the registered dealer and not from the unregistered dealer. FIFO method has to be adopted. That is my view also. So if you are having any goods which is purchased from unregistered also and from registered also the same product, and that product is available in the stock in hand as on 1/4/2024, which is date of shifting from regular to composition, then FIFO method, based on the FIFO method, it has to be applied. So we are clear with this question number 2 also. So question number 1 I have already answered. Headwise reversal has to be taken care, and if there is any balance which is payable, we have to pay from cash ledger, and if there is any balance which is available in the electronic credit ledger, then that will be lapsed. Second question, if you are able to exactly identify that the goods are purchased from the unregistered dealer, then there is no requirement of reversal on the purchases made from unregistered dealer. Third, there is one question which I have not added here. We'll just have question number 2A. So let us suppose this particular stock is purchased before 1 year, because in section 18(1), the input tax credit can be claimed only if the stock is purchased within 1 year from the date of opting into regular dealer. In 18(4), there is no such time limit. So even if the stock is purchased 3 years back, and if that stock is available in your hand as on the date 1/4/2024, then ITC reversal will still be attracted. Yes, we'll just move forward with question number 3. What if the goods are related to pre-GST regime? So let us suppose I have few stock in this particular example of 3.5 lakhs. I have stock of 1.5 lakhs which is purchased in VAT regime. Let us suppose in year 2016, and I have 2 lakhs of goods which is purchased in the GST regime. So for the 2 lakhs, I have the invoice. Based on the invoice, I will do the reversal. If I don't have invoice also, based on the market value, I will arrive prevailing market value. I will arrive at a value. That value will be certified by a chartered accountant. Now, in case of a pre-GST regime, whether still the market value and certificate from chartered accountant has to be done and reversal whether has to be applied or no reversal is required. Anyone who can give some insights on this particular goods purchased on pre-GST regime?
Whether
Yeah,
trans
good
credit
madam. Yeah.
whether trans credit was availed on that capital.
So the query comes now whether we have filed Tran 1 or not. So if we have filed Tran 1, madam, and we have transferred the credit also, then what is your view?
No, I still believe that you, if it is purchased in GST regime and you have carried forward the trans regime, the issue is how are you going to calculate this 5 years from 2017 or prior to that? That is also one more issue actually. So I think it still doesn't, if it is a transitional credit, it takes the color of ITC, right?
Yes.
In the GST. So
Yes.
I think then it still fall under 18(4) if it is
Correct,
within
correct.
that.
Correct, madam.
Vishalji, Gaurav here from Ahmedabad. I beg to differ that Tran 1 credit is actually not ITC. There are empty number of judgments. So, I mean, it will not take color of ITC.
Yeah, but
Correct. Sir, it will not take color of ITC as per section 16. That I agree. But if you read section 18(4) with rule, it talks about inputs relating to the, input tax credit relating to the inputs. Input tax credit relating to inputs. It never says that input tax credit availed as per section 16. So still, if you have availed through Tran 1 credit, it is still an input tax which has been transferred from the old regime to new regime, sir.
But will it still stay input tax credit? That is my question. It will not be an input tax credit at all.
Okay. Okay. I will just come back to you, sir, Gaurav, once again. Annapurna, madam, you just said about 5 years period something. Madam, that 5 years period is only for capital goods, madam.
yeah, I was just
Here
trying.
we are talking about only the inputs.
Yeah. So that's
because
it.
your example.
The more question is whether after so many years the pre-existing like pre-GST goods are still there. If they are there, whether they are serviceable or not. So that is again another question.
Yeah.
If it is input.
Yeah, and your illustration had both inputs and capital goods, so I was just trying to link on.
Yeah. I totally agree. So for capital goods, anyways, 5 years is elapsed for the year 2017. So therefore, there is no reversal which is being calculated on the 50,000 purchase of capital goods. Only on 1 lakh purchase of capital goods we are calculating because 2024 is the date of migration. So with regards to now, we'll come to that pre-GST regime of inputs. Let us suppose 1.5 lakhs is the old stock and 2 lakh is the new stock. So as per Gaurav ji, if also I have availed credit through Tran 1, that Tran 1 credit is not an input tax credit. So on the whole 1.5 lakhs, the credit reversal will not come. Before the Tran 1, let us suppose if I have not availed anything to Tran 1, there is few input tax credit or few SENVAT which I have availed in the excise regime or the TNVAT regime, and I have already utilized those. In Tran 1, I have not carried forward any of the credit. The transfer, there is zero credit which has been eligible for transfer. So therefore, I didn't file any Tran 1 form. So in this particular case, there is no input tax credit which is availed. Therefore, on this 1.5 lakhs, there is no reversal. This is my view. If the Tran 1 is not filed. If the Tran 1 is filed, Gauravji, I just want to bring to your notice one thing. It is just my view. I just want your view also on this. Rule 44.1 says that the amount of input tax credit relating to inputs held in stock. So in this particular case, it never gives a reference to section 16. But for sure, in the law, input tax credit is spoken in section 16 only. I totally agree. But then whether inputs relating to input tax credit relating to inputs held in stock, whether that will not trigger Tran 1 credit?
So basically, when we talk about input tax credit, it limits ourselves to the credit taken in the GST regime. That's my humble submission. And I mean, I'll welcome other people's view on that as well. But
Okay.
that is my understanding. So if it is outside the GST thing, IGST, CGST, SGST, UTGST, and CES, I think it doesn't take the color of ITC at all.
Well taken, sir. Anyone else who would like to,
In fact, that is the view that was taken in all the transition credit matters. Wherein it was said that it was payable. So a distinction was made between inputs and input tax and input tax, which is like transition credit, which is not an input tax, which Gauravji is saying. So I also concur with his views that that will not be considered for reversal in this case.
yes.
Arup sir, actually, I take that view because in many of the notices of 73 and 74 also, we have argued that this transition credit doesn't form part of this input tax credit. But for the purpose of reversal, when through the transition credit, it has merged into this electronic credit ledger, why can't we say that to that extent of input tax credit, it has to be reversed? Because I think we have seen in many of the instances, especially like unsold flats, wherever we are dealing with construction industry or many other industry, we are trying to see that we are adding even this transition credit proportionately, which has been used for the proportionately to the extent of exempt supply and taxable supply, we are taking the reversal. So why can't we take it in 18.4 actually, when there is no such
No, that is because of the strict interpretation of the law. If you see the definition of input tax, it does not include what has been paid earlier before the regime. It is any tax which is charged by the supplier under the 4 acts.
Yes.
So that is the basic premise on which we are arguing that transition credit need any reversal.
And Madam Gaurav here again, to add to your point, there are several notices that the builders have received in particular case for the earlier period transition credit which they have taken.
Yes.
And I presume all the matters are sub judice right now. There is no final judgment. The only contention that the taxpayer has taken is that they are not input tax credit at all. Furthermore, this thing came in with 1/4/2019 when the new reversal method came in for the square feet basis. So again, that is also under challenge.
Yes. Yeah. And one more just Vishal, before proceeding into, see, we are talking only on input tax credit in held in stock. We also have something called as input contained in semi-finished or finished goods. So, so how are we reading that? Is it something like work in progress we are trying to read, or how are we going to break up the input tax credit which is contained in semi-finished? If you can just throw some on that.
Yes, madam. So with regards to, let us suppose any manufacturing concern, if you are having any stock, raw material, semi-finished goods and finished goods. So on finished goods also, you would have purchased some material. So you would have some flow chart wherein this much particular input is being used for getting this output. So on that basis, whatever is the inputs which is used or whatever input tax credit which is held in that particular semi-finished goods or finished goods, that amount only needs to be reversed. So let us suppose if there is any particular process of manufacturing in which raw material consumption is 60% and the labor consumption is 40%, or labor is 30 and consumables are 10, example. So raw material 60, consumables 10, labor 30, total put together 100. And then the finished goods costing, which is valued in your books of account, is 100 rupees. On this 100 rupees, the input availed is only on the 70 rupees. So only on the 70 rupees, the ITC reversal will come. It will not come on the full 100 rupees. Because the wordings written are input tax credit pertaining to inputs which are held in stock, semi-finished goods and finished goods. So it never talks about any services which is already been consumed. So that service related component is anyways consumed, utilized. There is no reversal on the service related part. It is only on the inputs.
So I think a CA certificate is not required. Cost accounting certificate will be required.
Exactly.
Yeah.
We are getting cost accounting certificate only.
Yeah.
Madam, but if you go to CA certificate, I'm sorry, Arupji,
Yeah.
If you go for CA certification, for CA certificate, it only says that market prevailing rate. Then it will take the rate of full finished goods. It will never go into inputs which are held in the finished goods, no? Because if you go to rule 44, I think so, sub rule 3, where the tax invoice related to the inputs held in stock are not available, the registered person shall estimate the amount under sub rule 1 based on the prevailing market price of the goods on the effective date of occurrence of any of the events specified in subsection 4 of 18, or as the case may be 29.5, that is on cancellation also, and 18.4 also. So you have to arrive at a value based on the market prevailing rate. Then it will be very difficult for you to justify how much is the input which is actually being used, madam. Practical difficulty.
Anupama ma'am, what we practically do, say, we've done this for the footwear industry. So what we have practically done is we have, as is said in the rule, that is the value is not available, take the market rate. So say, leather, how much leather I'm taking, how much sole that I'm taking, how much binding material I have used, how much clipping I have used, how much shoelace, that shoelace clip I have used. All this, what we do is we take out the current rate and we see what is the consumption in each pair of shoes that goes in. Based on that, we have found out the quantitative value. We have considered the current market value of those goods, and accordingly we have considered for finished goods. It's very easy to understand because we know how much quantity is gone in. For work in progress, what we do is we consider a percentage. We have considered because we had about 11,000 pairs in operation. So for those, we got it certified by an engineer who told that this is something the kind of pairs which are in motion. So this is the work in progress that is in run. So based on that percentage, say 70% or 60% completion, we have calculated the value of inputs that is inbuilt in the work in progress. And that is how we have reversed it. And that's what we give to the department also later on.
Yeah, I think this similar provision was there in this transitional provision also. So there also we had taken the certificate. I think similarly it is required for 18.4 also now.
Yes.
Yeah. Thank you.
So with regards to Arupji and Gauravji, transitional credit.
Vishalji, am I audible, please?
Sir, one second.
Yes, please.
With regards to this section 140, transitional credit, the wording itself says that transitional arrangements for input tax credit. So there are few arrangements which is given in the law that you can transfer the old credit to a new law, which is again an input tax credit. In the new law, the word used is input tax credit. So I totally agree there are many judgments which says that transitional credit is not input tax credit. Okay, but while reading rule 44, it says that any input tax credit which is in relation to inputs held in stocks. It has never says that whatever input you have availed under the law.
Right. That is it.
So, Vishalji, even I wanted to further this thing only. Adding to yours, it is right when it is said that the definition which is given for input tax and input tax credit does not include the transition credit, but looking to section 140, in addition to what Vishal is saying, so it just says that the registered person shall be able to avail whatever is SENVAT or say VAT, etc., in the electronic credit ledger in the manner as may be prescribed. So rule 117 clearly says, if we go to the rule says that every registered person entitled to take credit of input tax under 140, the amount of input tax credit shall be so, whatever. So yes, both the views, considering both the views, but I'll side with what Vishal is saying. My leanings would be towards that side.
So
With the
this is
support
because
of the rule,
we
and
want
since it
peace
is
from
in
the
credit
department, sir.
ledger, and on the basis of logic also, that since if whenever the supply happens, the GST has to be paid. So now he has already availed the benefit of the taxes inherent there, maybe lying in credit ledger, may be used to pay the supply. So that is why the reversal is there. So I'll go with the view Vishal is subscribing to.
Thank you, sir. Anyway, any which case, see, you will
one
not
more
be reversing. One second, sir. Any which case, you will not be reversing excess, sir. You will be reversing only to the credit which you have availed. If you have availed 18%, you will reverse 18%. If in the pre-GST era you have availed only 5% and the 5% has been transferred to the TRAN credit, then only based on the 5% only the reversal will come. It is not that the total 18% will come. So we will never say that the government is having undue advantage.
Only if the invoices are there. Otherwise, it will be market.
Pardon?
Only if the invoices are there.
हाँ, only if sir invoice अगर नहीं है तो actually अपना payout ज़्यादा हो जाएगा. Yes, Nilesh ji.
So again, my point was more with the Gurjit ji as well. When we read the section 2, it has to be read in the context. So when we said in the context of the department will say it is not in that context, we should read this definition into this provision, because this provision has to be read something differently. So slightly I have also the way law has been analyzed by the Supreme Court, I feel we should read in the context and input tax credit include transition credit.
Well taken, sir. So there are few views who says that transitional credit will not form being part of this input tax credit for 18.4. And there are few views which says that input tax credit, transitional credit will form part of input tax credit. We don't have any ruling as such. And I don't feel so any person will go for an objection with courts, because the amount involved will not be much major amount for the purpose of this reversal for transitional credit. I think so we can move forward with regards to a next case study. Sorry, I think so 18.4 is done. Okay, now this is 18.6. So any further queries on 18.4? There is also a proviso clause in 18.4 wherein it says that if there is any credit which is lying even after the reversal is made, then that particular credit will be lapsed. That means you cannot claim the input tax credit as a refund. Yes, shall we move forward? Arup ji?
Yeah, let's move forward.
Yes. So now we'll go to section 18.6. Now 18.6 talks about sale of capital goods. So whenever you are selling any capital goods on which the input tax credit has been availed, then the sale value has to be compared with the ITC reversal value, which has to be calculated based on the section and rule. And whichever is higher is the tax amount which you have to pay. So let us suppose we will have just one example and then we'll come to this. I will come to these examples also. Yeah, we'll just take this example. So we'll just go for case 1. Before that, Vishal has purchased laptop on 1/4/2024 for 1 lakh rupees and 18% GST is 18,000 rupees. Now in case 1, I have sold this laptop in March 2026. First of all, this laptop is a capital goods and I have availed this ITC of 18,000 in the month of April 2024 itself. So there is no restriction that I should not avail it. So I have availed the ITC for 18,000 rupees. Now this particular laptop has been sold in 2026, March 2026, and the sale value is 40,000 rupees. In March 2026, I sold for 40,000. The output tax is 7,200, 18% on 40,000. Now how the ITC reversal has to be calculated? ITC reversal has to be calculated based on the useful life and how much life is already been used and how much life is balanced. So the deemed useful life is 60 months and I have used for 2 years, which is 24 months. So on this 18,000 of credit, 7,200 is only the amount which I can actually use it, because this is only the useful life for which the capital goods is been utilized. The balance ITC is 10,800. which is nothing but 18,000 minus 7,200, which is 10,800. And the tax payable is 7,200. 7,200. ITC reversal is 10,800. Whichever is higher has to be paid. So I have to pay 10,800. But what happens practically, I'll say you. So if you go to the section says that tax is whichever is higher, you have to pay the tax. But when I do practical filing of GSTR1, I will be putting sale of 40,000 under B2B or B2C as the case may be. In this 40,000, I will select 18%, which will be 7,200. But the tax which has to be paid as per section 18.6 is 10,800. Therefore, output tax will be 7,200. ITC reversal will be 3,600. I cannot file B2B itself as 40,000 and tax 10,800. Then the 10,800 transfers the credit to the recipient also. But the recipient is liable for credit only for 7,200. 3,600 is by way of an ITC reversal, which I have to do for satisfying the condition of section 18.6. Are we clear with this particular example? A clear-cut, straightforward example.
Vishal, reversal will be 10,800. Only for disclosure purpose, we will be doing 7,200. Because reversal has to be up to the extent of 10,800. Out of that, we adjust 7,200 for output tax liability actually.
Correct.
So yeah, so we cannot say only 3,600. The whole 10,800 has to get.
Correct. I came with that only, madam. 10,800 is the total reversal which you have to do, madam. On this 10,800, while filing the GSTR1 practically, you will already show 7,200 as output tax.
Yes.
Okay.
So you are already remitting 7,200 to the government.
Right.
Yeah.
Balance remitting will be only 3,600, madam.
Okay, got set of that 7,200 with it.
Yeah,
Okay.
yeah.
One
what
more
I meant.
one more just a scenario like
Yes,
you
madam.
have taken an example of laptop. Let us presume it has a lifetime of only 2 years, let us say. So always, even though it is there in your stock or not there in your stock, like it would have been scrapped also. So even still in that case, we have to deem that it is a 5 years life of capital
Yes.
goods actually.
Madam,
so that
now,
is one more challenging, yeah.
Okay, we'll come to that also, madam. So now in this particular section 18.6, there is one proviso clause which says that if the capital goods is a refractory, bricks, mold, dies and jigs, which is used in manufacturing process basically, which is used in manufacturing process, furnace related, जहाँ पे भी scrap का धंधा है, furnace है, तो वहाँ पे refractory, bricks, mold, dies and jigs are used. Now, if these things are used as a capital goods, then this 18.6 will not be applicable. 18.6 will not be applicable means no need to calculate 5 years reversal. The condition is these particular refractory, bricks, mold, dies and jigs has to be sold as scrap. So let us suppose I add one mold. I will go into this particular example and then I will come to your query, Annapurna madam. So this particular case, company Alu Limited is in business of manufacturing of O-rings for a car manufacturing company. It heats and vulcanizes the natural and synthetic rubber, presses them into rings using the mold approved by the car manufacturer. The useful life of the mold is generally 4 years. It is purchased for 5 lakhs plus GST in July 2018 and sold in 2023 as scrap for 5,000 rupees. Year 2023 एग्जांपल है, अपन सोचते हैं 2019 में बेच दिया है, मतलब जुलाई 2018 में लिया, जुलाई 2019 में स्क्रैप कर लिया, purchased for 5 lakhs, sold for 5,000. Even in that case, ITC reversal will not come because it is a mold which is used for the purpose of manufacturing process. 18.6 will not trigger. Yes, sir.
Sorry, please continue.
Okay. In this particular case, section 18.6 will not trigger because it is a mold which has been purchased. So on the full 5 lakhs, ITC can be claimed, and on 5,000 rupees, output tax will be paid. There is no ITC reversal which is required. There is no 60-month concept which has to be seen. But for the purpose of rule 42-43, we will see that 60 months calculation, rule 43, and the ITC reversal for exempted supply, taxable supply, that will be separate. But for the purpose of sale of capital goods in mold, refractory, dies and jigs, no need to calculate ITC reversal. Now, let us suppose this is not a mold, like Annapurna madam said. Let us suppose it is a machinery or a other capital goods other than mold, dies and jigs, and the useful life is only 2 years. 2 years. Nowhere in rule 43 it says that whatever is the useful life of the asset or 60 months, whichever is higher. That wordings are not there. it has straightly deemed that all the capital goods are having 60 months credit. So in a case where capital goods is used only for 2 years and sold as scrap, even then this section 18.6 will come into picture, sir. Picture, madam. This is my view.
Vishalji, one more question.
Yes.
That in case of capital goods, which is used for commonly for exempted and taxable goods, will
Yes.
there be any change or that ratio will be same? This rule will be same.
Sir, this rule will be same, sir, still.
Okay. So it means we have not utilized the ITC for say 48 months. Still, we have to pay back 12 months ITC on those capital goods. No?
I didn't get you. You have not utilized ITC means?
Naturally, because we purchased a machinery which is used only 30% for taxable goods. So we effectively used the ITC up to 30% only. Okay.
So you, I'll just clarify once again, sir. You have purchased a machinery which is used for taxable supply and exempted supply also.
Okay.
In your case, taxable supply is 70%, exempted supply is 30%.
No, taxable price is only 30% and exempted is 70%.
Okay. So taxable is 30%, exempted is 70%,
So
only one machinery.
Effectively,
as per rule 43, every year 70-30 ratio pe 70% of reverse kar rahe ho for that 12 months. Every 12 months criteria you are reversing it. And let us suppose after 3 years you are selling down this machinery.
Okay.
So when you sell this machinery, still the input which is been availed is the total ITC. There is one particular, once again, I'll just bring to your notice. Rule 43. It is also written in this particular law also, sir. I'm just not able to get exactly where it is. But reversal will still come, sir. Even if you have already reversed for taxable and exempted under Rule 43, as per section 17.2, even then 18.6 will trigger.
Okay, thank you.
But then that will lead to double reversal.
No, uska calculation bhi hai, ek minute, sir. I'm just looking that.
Bye.
Anyone, Arup ji, wo calculation, if you remember?
18.6 का क्या?
18.6 में Rule 43 में.
अच्छा जब Rule 43 का बोल रहे, हाँ right. There is, but उसमें तो जितना मैंने रिवर्स किया है उसको माइनस करना पड़ता है.
हाँ, जितना आपने ऑलरेडी 43 में रिवर्स किया है वो माइनस
उसको माइनस करना पड़ेगा. Right. You're right. So yeah.
I'm not able to get exactly in which subclause it is, but it is there in Rule 43, sir.
Yeah. So what we effectively do is, what is the total credit divided by the unexpired period of the capital asset which I have not used. So जितना मुझे reversal करना पड़ेगा अभी less whatever I have reversed under Rule 43 that has to be deducted. Balance only has to be written.
Correct.
Okay. Then वो 43 वाला formula देख लेंगे.
हाँ वो है, right. विशाल जी ने सही बताया. Right.
तो 43 वाला formula है, sir.
हाँ उसमें formula है, right. उसमें दिया गया.
Thank you.
Yes. Annapurna madam, again, your queries. You said that the useful life is only 2 years and not 5 years. But even then, the rule never says that useful life of the asset or 5 years, whichever is higher, या whichever is lower. वैसे कोई बात नहीं किया हुआ है. So, what is your view on this?
No, I always believe that the life of capital goods can be 1 year, 5 years, 10 years. It can go at any proportion. I think policy has taken a decision of average 5 years, but in many instances we have seen that within 2 years it becomes a scrap, and still that is not in existence, but still based on this rule we are getting a deemed reversal for 3 years, all that. Okay. So this is the practical issue. I thought I'll just
correct. So in section or rule there is no such wordings, therefore we have to do the reversal. There's no other option, but only if it is refractory bricks, mold, dies and jigs, then there is no reversal required. We'll just move forward with these cases. Okay, this is the useful life calculation. This section 18.6 talks about 60 months calculation only. This talks about months because Rule 43 talks about quarter. This talks about months. So how many months which is already been used, that many months you can ignore. Part of the month has to be ignored. That many months will be reduced from 60, and on the balance months, ITC reversal has to be done. So we'll just have this particular case. First case is already been completed. We'll go to the case 2. Now, in case to what has happened, I have purchased for same 1 lakh, but sold after 2 years for 70,000. On this 70,000, the tax at 18% is 12,600. So total useful life, which is already been used, is 24. Total deemed useful life is 60 months. Therefore, 18,000 is the ITC, 7,200 I can use, 10,800 I have to reverse. Now here output tax is 12,600, ITC reversal is 10,800, whichever is higher. Therefore, 12,600 I will pay by way of an output tax. There is no ITC reversal which is required.
Vishal, just a query here.
Yes.
There is a provision in Rule 44, last provision. It is saying that where the amount so determined is more than the tax determined on the transaction value of the capital goods. The amount determined shall form part of the output tax liability, and the same shall be furnished in Form GSTR1. What this mean actually? Because the tax determined on transaction value is say 12,600.
Correct.
Let us presume in your first instance, where the amount so determined, the amount determined is 10,800 and the tax determined on the transaction value is 7,200.
Correct.
Right? So the amount determined shall form part of the output tax liability, they are saying. What does this mean actually? The last provision?
Madam,
Yeah, Vishalji, regarding this, I would like to come because regarding this, we have already filed representation before the government. There is a lacuna in this particular provision.
correct.
Why? Because if I put in 10,800 in my GSTR1, then if it's a B2B supply, if it's a B2C supply, then there is no problem. But if it's a B2B supply, then mera jo samne wala hai, he's going to get extra credit of the 3,600, which tax is not actually paying to me because I'm raising the invoice only for 7,200 ka tax. So we are already taken up this with the government. But so the solution that has come, right? Yes, right. So the solution that has come is, आप GSTR1 में 7,200 दिखाइए. In 3B you show 10,800. So आपका जो 3B और 1 का difference आएगा for that month, you can easily identify that the difference is for this ITC reverse.
Arupji, Gaurav here from Ahmedabad. I have one
Yes,
point on this, sir. Okay, whenever ITC is referred, it says tax paid by the taxpayer on the goods supplied to you. It is not talking about tax payable. So agar GSTR1, if you manually correct it from that 7,200 to 10,800, it will still accept. And the receiver can still avail ITC of 10,800 because it is tax paid by the supplier.
Arupji, there are 2 points on this.
One second.
ITC doesn't say tax payable by the by the supplier. It says tax paid by the supplier.
Tax charged by the supplier.
Yeah, charge. So charge 10,800 अगर किया है, so the receiver can might as well avail.
नहीं.
Sir, वो charge 10,800 नहीं करेगा sir.
नहीं करेगा, exactly.
Charge तो 40,000 पे 7,200 ही करेगा. But for the purpose of 18.6, he has to pay 10,800.
Balance is reversing. Yes.
So, but 18.6 बोलता है कि it is higher of this or the other thing, whichever is higher, he has to pay.
He has to pay. Right, Gaurav, yes, right. He has to pay. But again, the context is of transaction value पे कौन सा tax लग रहा है?
Vishal, is it possible if you can display that rule? Just one second.
Yeah.
Arupda, I have to stop.
Yeah, buddy.
Once again, share the entire screen.
Yeah, one second.
My point was when the rule was originally drafted, it was context of a 1, 2, and 3. And in 3, that's why they have said it should be added to the output liability.
Right.
Second point is practically what we can do. We can collect this amount from customer as well. There is no bar for restriction on us not to collect this amount as a tax from them. In the old regime, if you remember, Senvat credit, we have to, if we are paying an exempted supply, there was an option to pay a 6% duty.
Right.
So that duty can be collected from the customer. That was the ruling under the tribunal. If I'm not wrong, Kirloskar was the judgment. But the third point I want to say that the correct treatment is giving in a one, we should disclose the actual 10,000, whatever the liability is coming out, and not the 7,200. And that is what my view.
Regarding your second point, the issue is that GST is more of procedural law than legal law, right? So when you're going to GSTN, now if the transaction value is 1 lakh, you cannot in any way put 20,000 there as tax payable. So that is the one challenge that is there in
Sir,
here. And-
is that amount not editable? I believe it is
Sir,
editable.
it is editable. You can make it any amount, sir.
Yeah,
So GSTR1 is editable. That is agreeable, sir. But anyways, the transaction value and the tax rate will not match, no, sir.
Yeah, that's what I'm trying to say.
So you mean to say that I will charge 40,000?
No, but once again, are you saying that I can put 1 lakh beside 18% and make that 10,000, 10,000?
वो allow करता है, sir. GSTR1 allow करता है, sir. Because in export we face this problem. 18% exactly होता नहीं, ऊपर नीचे होता है. तो जो शिपिंग बिल में होता है वो फिगर हम फिल करते हैं GSTR1 में.
उसमें करते हैं, एक्सपोर्ट्स में करते हैं. But
B2B में भी allow करता है, sir.
अरुपदा पोर्टल बहुत कुछ ऐसा करता है जो लॉ में लिखा हुआ नहीं है, सर.
तभी तो हम लोग हैं.
Sir, but now just a second. So Gaurav ji or
I think Hanish ji wanted to say something.
Anish ji, okay.
Yeah,
So
you
my
wanted the
point was
rule
also
to
the
be
same thing.
explained. Yeah.
Yeah, my point also is the same thing. Till we wait for the rule to be displayed. Ki why can't
Rule or
we
section?
collect
Rule.
Left.
Rule. Yeah.
Rule 44.
Rule 44 में sub rule 6.
Yeah, 1 second.
You can continue, Anish ji.
See, it specifically says the amount determined shall form part of the output tax liability and the same shall be furnished in GSTR1. So that means जो भी
So
tax
this is
pay
case
करना है.
when, I'm sorry to interrupt. This is the case only when your output tax is more than the ITC reversal. देखिए वो proviso clause says that provided that where the amount so determined is more than the tax determined on the transaction value.
Yeah, so when the ITC reversal
ITC
is more
reversal
than
is
the
more
tax
than the
payable.
transaction value. Okay.
Yeah, so then you have to declare that also in your GSTR1 only as a output tax liability. So in your example, जब मेरा output tax is coming to 7,000, but the reversal is coming to 10,000, that 10,000 also should be declared as a output tax liability only in GSTR1.
We'll come to this example. So you mean to say 10,800 has to be declared in GSTR1, first case?
Yeah, correct.
But with the taxable value 40,000 only.
No, but the lacuna is here. I'll tell you why we went to the government, first of all. What was our scenario? We had sold a machinery worth around 1 crore 20 lakhs odd. वहाँ पे अपना difference आ रहा था 16 lakhs का. Now, if I show in my GSTR1 16 lakhs का extra credit, the person in front is saying, how can I take proportionate credit? Because I'm getting the entire thing. तो उसमें मेरा जो है उसमें extra 16 lakhs मैं क्यों मतलब अपने 1 में 2A में जो आ रहा है उसमें हम लोग कैसे करें? So now the question will come, is there a provision wherein I can take partial credit without a reason being there?
No,
so that is the
Arupji,
main.
sorry, one thing here.
One second, Anish ji, we'll just break the facts 1 second. So you mean to say you will charge 40,000 plus 10,800 to customer?
Right.
पहले आप वो बोलिए ना. और customer 10,800 ITC ले सकता है क्या?
हरीश जी वो बोल रहे हैं. That is what the proviso is saying.
No, see, proviso is saying output में add कर दो. So in this example, 10,800 add कर दिया. So I will enable the recipient to claim the credit because अगर output में add करना है तो invoice also I will charge 10,800. And if I have to enable the credit in the hands of the recipient, what I will collect is I will collect the sale value, which in this case I have agreed at 40,000. And because I'm enabling higher credit, instead of charging him tax of 7,200, I'll charge him 10,800 because that is what law is asking me to do. So I will collect 40,000 plus 10,800.
यहाँ पे problem कहाँ पे आ रहा है? I'll tell you problem. For this I've been fighting for the last 2 years.
Arup sir, may I?
Yes, sir. Yes, sir.
So, sir,
sorry, I couldn't hear you.
Sir. First point, Anish ji, you have to say something. So, sir, first thing we are talking about the points about GSTR1, how to display it there.
Reporting,
okay?
yeah.
So how to report it. So one thing we said that the tax amount is editable. There is another aspect which is there that the invoice value and the taxable value can be different. There is no matching for that. So we can have a taxable value in accordance with 10,800, and that will be the taxable value, and 18% that will be the correct tax. And in my invoice, whatever is the value, say I've sold it for whatever amount. In this case, I've sold it for 40,000 plus GST will be 10,800. So from the customer, we will be charging 50,800. The second aspect, Arupda, which you are talking about is that he is getting excess ITC. Can he get that excess ITC? It has to be seen in this scheme that for the capital goods, that it has been formed in a way that once the capital goods are sold or they are capitalized in the books, the original value and the reversal, etc., is that life is 60 months and then it is there. So again, if it goes 10,800, okay, for him it is 10,800. If that buyer utilizes it for the entire life, then it is okay. If he sells it down, again, it will be coming back to the same thing. That the ITC originally availed was 10,800 and he has to reverse accordingly for the proportionate period. It will not be that he'll have to reverse as per 7,200. If he's paying the tax 10,800, he will avail it for the entire life. Let's say if he sells it after 2 years, proportionate will be not in reference to 7,200. It will be in reference to 10,800.
No, that is acceptable.
His example.
There is
just
example, a minute. Sir. There is one more view here.
One second. Guruji, sir,
there is one more view, but that is not widely prevalent. That view says that once a capitalized good, the life is 5 years, so it may be taken from the original period. So if the seller is giving the details that it is for 3 years and this is why I've charged the tax, so the remaining life will be 2 years only. It can't go on extended every time for 5 years for every sale.
Right, that is also, yeah.
So that is also a view, not widely prevalent, but that is also a view being taken.
Right. Yeah, Gauravji.
Sir, to add to Gurjeet sir's example here, कि भाई taxable value और tax का value जो based होता है different होता है. You can go to the example of used car, wherein notification 8/2018 में the sale value is say 5 lakhs, but the tax could be 0 because it is the margin value was negative, and if the margin is positive, the tax is paid only on margin. So going by that example, also, आप taxable value और जिस पे tax charge करते हैं can be different values per se.
Gaurav, just in this regards, in sale of motor vehicle, the margin amount is only taxable amount, sir. It is not the full amount because notification के नीचे जो wordings लिखा है, it says that the value shall be adopted as the margin if it is positive. If it is negative, then nil. So the taxable value is the margin amount, not the full sale value.
Agree, sir. मैं खाली बोल रहा हूँ कि when the discussion was that 7,200 के बदले 10,800 डालना है, both in GSTR1 and invoice, that is possible. Other view is also there. I'm just giving an example of AW 2018.
Okay.
Yeah.
And sir, the proviso says that you have to charge. The proviso says that it should be reflected in GSTR1. तो जो अपना earlier discussion था कि GSTR1 में 7,200 दिखाएंगे और 3B में 10,800 दिखाएंगे, वो possible ही नहीं है. Because the law says GSTR1.
And no, that's Arupta, one more thing that now the hard locking of GSTR1 into 3B is happening, so that will not be possible going further to amend the values in 3B also. So the entire design and structure is in that manner.
That's why what we have been trying to do for the last 2 years is bring an amendment to this particular proviso. What we are suggesting is, let us have the transaction value in one, let us do the ITC reversal and reversals all. Simply. Why I'll tell you what is the practical problem that you're facing on the ground. You are a corporate and you have got an approval from your finance team for say 1 crore 18 lakhs. Abhi, now because of the supplier's reversal, because the reversal and all these calculations are done, post the agreement is done, more or less, all the invoices, all the quotations are finalized. After that, all these reversals will come into place. So post the approval from your management team for 1 crore 18 lakhs. If I tell you tomorrow that I'll bill you 1 crore 34 lakhs, because मुझे और भी कुछ reversal करना है for my unexpired life of the capex period. There are two issues which are coming. He's saying, ठीक है, आप मुझे कर दो 1 crore 34 lakhs. I don't have any problem, but I'll pay you only 1 crore 18 lakhs. Right? So उसमें the challenge is that then if I am showing something and the सामने वाला जो है, he's saying that मेरा तो फिर वो 16 lakhs का जो है वो difference बन जा रहा है. That is becoming a challenge because I'm not paying you this amount. So I cannot
Arupda, we have already crossed 10
Yes,
just
yes.
bringing that into
Arupda,
highlight. But for
Arupda,
this
sorry to
minor
interject,
point,
though.
the contract may be designed at applicable taxes
Exactly,
rather
sir,
than
exactly.
specifying the tax rate.
Yeah,
So
yeah,
it
yeah.
could be the HSN classification or anything, etc. applicable GST.
Right. So I think since it is 10:03, Vishal ji,
Yes.
second session भी आपका कम पड़ गया.
नहीं अभी बस और दो कॉलम है सर.
अरे कर लेते चलिए 2 मिनट में कर लेते हैं.
Yeah.
Because we started at 9:05
First is
today.
I'll just I agree with Anish ji. This particular rule also says that it has to be added to output tax liability. But my query is only on the point that if taxable value is 40,000, how you will fill 10,800 as the output tax? That is the problem.
Sir,
So we'll go to the case.
40,000
Can I
is
just
the
add one point?
invoice value,
Sorry
it is
for
not the
the
taxable
interruption.
value.
Hello?
Yes, Murli madam. Renuka madam.
Yeah, there is one perspective. I do not know whether we discussed that. See, supposing I am passing on the 10,800 credit to the buyer. Don't you think it is wrong because I am reversing the ITC that has become ineligible because I had sold my capital goods within a period of 5 years. So I cannot pass on that ITC reversal to the next buyer who is going to buy that capital goods from me. Will it be, what is it not right? Is it wrong? I feel it is wrong because I use my capital goods for a period of 5 years. Then the rule doesn't apply at all. I pay when I sell that particular capital good, whatever relevant tax that I pay and close the case. But whereas which I am going to sell it within the period of the 60 months period, then the rule says the unutilized portion for which for those number of months you reverse the credit. So it is the liability of this ITC reversal is entirely on my head. So as per the members, what they say, you to pass on the 10,800 the other person. I'm not legally correct in doing so, no sir. For the third party, I'm selling the 40,000 only for 7,200 rupees. So this balance amount should be only by my cost. I cannot pass it on. Is my just
correct. So here what Anish is saying is, just a second, Renuka madam. Anish ji, what Anish ji is saying is this particular 18.6 also says that if the ITC reversal is more than the output tax, then the said amount shall form part of output tax liability. Because if we go to section 16.2 proviso, madam, in 16.2 proviso also for 180 days before the wordings what it has to be added to the output tax liability. Then they amended and changed the wording that it has to be reversed. But this amendment has not brought in this particular section. So what Anish is saying, I accept partially that it has to be added to the output tax liability. But whether you can charge to the customer 10,800 is a big question. Because he is not eligible for credit of 10,800. He is eligible for credit only for 7,200.
Right. Vishalji, so since it's 10:06, we'll have to close it here. So I think now we have an article as a faculty group. We have an article to write about this proviso to section 18, rule 44. You know, what could be the implications? I think Renuka ma'am has also raised a pertinent point. So, but as we know, we always try to close on time.
Also add Arupda with respect to branch transfer of capital goods, whether rule 28.2 proviso will prevail or rule 18.6, section 18.6 will prevail.
So in दोनों पे हम लोग चर्चा करते हैं through writing, but today we'll have to close it. And thank you, Vishalji, once again. Let's have a huge round of applause for Vishalji.
Thank you, sir.
From wherever we are sitting, from across India, you have people from Jammu to, I think Chennai and Bangalore, everywhere. So thanks to all the members for joining in. We'll again meet on the next Saturday. And a big shout out to Vishalji once again. Thank you very much.
Thank you, sir. Thank you.
Thank you.
Arupda, just to add, Vishalji's advantages, he is on the point. अपन यहाँ वहाँ भटके वो उधर खींच के लाएंगे बोले ये point discuss करो. That's the most amazing part of it.
Yes. Thank you. Thank you.
Thank you.
Bye.
Thank you, Vishal. Excellent deliberation. Thank you, Arupda.
Yes, thank you.
Thank you, sir.
Thank you.
Thank you.